Hello, my name is Steve Bigelow with the Candlestick Forum. This is going to be observe the obvious kind of presentation. We could see when the Dow was topping out. There was your reversal alert when they gap up in the overbought condition. But the true confirmation of a downtrend is when they close back below the T-line. Again, the T-line rule. The same thing over here in the NASDAQ. Your uptrend remained in progress, but then notice your left-right combo. A left-right combo, which is one of your strongest reversal signals. It's a doji followed by a bearish engulfing signal. At the same level it topped out before, and a close below the T-line. On Friday, you could see from that big sell-off day, they gapped down below the previous day's open and went the opposite direction. So now you have a bearish left-right combo, a strong reversal signal, and a bearish kicker signal. Stochastics heading down. You're probably going to see more downside. Now, does that mean on Monday we're going to see selling? Maybe not. After the Dow traded down 800 points on Friday, you might see a bounce, but you have to assume that the downtrend remains in progress. One of your candle or T-line truisms, if you see a candlestick sell signal and a close below the T-line, the probabilities are extremely high that you're in a downtrend. Same scenario on the bullish side. If you see a candlestick buy signal and a close above the T-line, the probabilities are extremely high that you're in an uptrend. Now that's probabilities. Anytime you see something close below the T-line after a sell signal, you want to close it out. What's the worst case scenario? It opens positive the next day and trades back up above the T-line. You consider getting back in. But there's one more assumption, that if you're trading below the T-line, that tells you that there's a bearish inference in that trend, and that any negative news is more likely to create a much stronger downside bearish reaction than if you were above the T-line in an uptrend. Again, that is just the human nature, that if things are selling off and they see bad news, everybody's going to be bailing out. If you're in an uptrend and you see bad news, it probably gets diminished a little bit because the bullish sentiment is still in place. So this week, we're not going to recommend any sectors, only because after a big move like we saw on Friday, we don't know which sectors are going to act the strongest or the weakest. Now, we know the electric vehicle sector has continued its uptrend, and that was evident again on Friday, where they opened lower, like in Lucid, and closed above the T-line. You just want to stay long. You can see there was bullish strength in GOEV and LI. So there's really nothing that you want to do on a day after a market move like we saw on Friday. However, there are very strong signals. Look at ENTA, 2+2 analysis. A morning star signal, right smack dab off the 50-day moving average. And notice where your doji low was on that day, bouncing off the 50. And then followed by a doji sandwich, or your morning sandwich, a McMuffin. And also illustrates what the relative strength was. Notice what ENTA did on Friday when the market was selling off dramatically. That tells you there's something independent going on in that stock. You might still be a buyer of this one on positive trading. And in the downtrending stocks, like in the cruise lines that showed strong sells ever since they failed at the 200 and then closed back below the T-line, gapping down, this becomes your short covering alert. Again, going back to the philosophy of the Japanese race traders, where do most people sell? They panic sell at the bottom. Start looking to cover short positions if you're short. So we got to see what the markets are going to do from here. because we have no idea which way they want to move this market. But that means on December 4th, we're still going to be doing an ultimate day trading entry strategy session, a mini spotlight session. It's usually lasts a little over an hour, but it's got a lot of valuable information for you. Going to get a lot more information, and it gives you a lot more insights that even if you're a day trader, it's very effective. If you're a swing trader, it gives you very effective entry levels. So with that, watch to see how these markets react over the next couple of days. Obviously, there's been some great damage done to the bear or to the bulls. Have to see what the markets do from here. That'll be it. We'll see you in the chat rooms.